Today is the 27th of February 2023. My name is David Hickson, and in today's market update we're going to be taking a look at the S&P 500 or SPX and gold. Before we do that, I must ask you to please make sure that you have read and understood these disclaimers. Let's start with the SPX or the S&P 500. This is data coming from my trading platform, so it might differ ever so slightly from the SPX data that you are seeing. I'm recording this video early on the 27th before the US markets have opened, and so you can see I have a very small amount of data there. This is the analysis we've been looking at for some time in the S&P 500 with a 20-week cycle trough over here in the middle of October, meaning that the next 20-week cycle trough is expected to form round about now, or certainly fairly soon. And that is the nest of lows at the foot of the chart for the 20-week cycle trough. If you don't know what a nest of lows is, then I would encourage you to watch previous market update videos. I go through most of these basic principles in each and every one of these market update videos, and I try not to repeat myself too much. The important thing, of course, is that price is coming down into the 20-week cycle trough. Now, you might notice that there are no cycles of a longer length than 20 weeks on this particular chart, and the reason for that is not because they have not been found in the analysis, but because I have chosen to hide them. And the reason I'm doing that is because there is still some debate as to whether the 18-month cycle trough should belong here in the middle of October, which is presently my preferred analysis, or whether the 18-month cycle trough is in fact going to be synchronous with this 20-week cycle trough. That is a debate that I have been discussing in these market update videos for the past few months actually, and I find that when there is a question surrounding the longer magnitude cycle troughs, I find it much easier just to focus on the cycles that I have confidence in, which in this case is of course the 20-week cycle. We have a very good and clean analysis here. As you can see, we have the M shape for the first 80-day cycle. There is that 80-day cycle trough which came in on schedule just before Christmas last year. And this is the second 80-day cycle in the current 20-week cycle, which is completing its M shape and is now coming down into the 20-week cycle trough. So let's have a look at some details in terms of the 20-week cycle trough. First of all, you can see that there have been 67 days since the 80-day cycle trough just before Christmas. The average length of an 80-day cycle that Hurst discovered 50 years ago is in fact 68 days. And so we are today, on Monday the 27th of February, only 1 day away from the average length of an 80-day cycle. However, if you look at the bottom right-hand corner of the chart, you can see the recent average wavelength of that 80-day cycle has been 70.5 days, and so we are still about 3 days away from the recent average wavelength of that cycle. And if you don't understand the difference between what I call the average wavelength discovered by Hurst 50 years ago and the recent average wavelength, then I would encourage you to download the 10 Core Concepts document that there will be a link to in the description below this video, which explains these basic concepts. The point is that, of course, we are expecting the 80-day cycle trough to form fairly soon, and that trough will be synchronous with the 20-week cycle trough, which is also expected to form about now. Let's take a look at some FLDs, and we'll start with the 80-day FLD. Now, when price comes down into a 20-week cycle trough, we would usually expect price to cross down below the 80-day cycle FLD. You can see that, interestingly, price has reached that FLD. It touched it on Tuesday of last week. There we go. And it stayed just above that FLD because of the fact that the FLD was moving down during the course of last week. And so far today in pre-market trading, of course the markets haven't yet opened, we are ever so slightly below the level of that 80-day cycle FLD. So what are we expecting here? Under normal circumstances, we would expect price to cross down below the 80-day cycle FLD and generate a target to the downside. However, time is running out for this 20-week cycle trough because it is expected to form round about now. Of course, price could move down very sharply and very steeply and form a trough within a few days and achieve its target. That is not impossible. but it is, in my opinion, very unlikely. And so it becomes more likely that price will in fact find support at the level of this 80-day cycle FLD. And so we need to stay on alert for the fact that the 20-week cycle trough is going to form round about now. Perhaps it even formed on Friday, but we cannot confirm that yet. And that it is going to find support at the level of the 80-day FLD. If it does that, what does that mean? If price forms a 20-week cycle trough at the level of the 80-day FLD, it indicates that there is bullishness in the market. And that, of course, would mean that it is likely that the 18-month cycle trough did indeed form in October. Several times in recent market update videos, I've had reason to state that fact, that the 18-month cycle trough probably formed in October. And so the evidence is certainly piling up in terms of that 18-month cycle trough having already formed. As a matter of interest, this idea of the fact that price can sometimes find support at the level of an FLD even when it is expected to cross down below it occurred only a month ago. If you go back and take a look at the market update videos recorded at about that time, you can see that we were expecting a 40-day cycle trough in the third week of January, and price came down to the 20-day cycle FLD. Again, when price is approaching a 40-day cycle trough, we would expect price to cross down below the 20-day cycle FLD. But as you can see over here in the third week of January, price found perfect support at the level of that 20-day cycle FLD. Again, that does not mean that the idea of price crossing below FLDs doesn't work. It is simply an indication that there was a lot more bullishness in the market than would have been expected in a neutral market. In other words, one where bullish and bearish pressures are balanced. While we're looking at FLDs, let's revisit the 40-day FLD that I spoke about in last week's market update video. Of course, last week Monday was in fact President's Day, a public holiday in the United States, and so there was very little trading. There was a little bit of pre-market trading before the US markets went on holiday, and so you can see I do have a little bit of price data there from my trading platform, and price did cross down below that 40-day FLD last week. Or in fact, it crossed the FLD over the weekend. How do we calculate targets on the basis of price crossing an FLD? We need to find the level at which median price, and that's that orange line on the chart, crosses below the FLD, and you can see the exact level at which it crossed below that FLD was at 40.68. We then measure the distance from the previous peak down to the level at which price crossed the FLD, 40.68, and we project a target to the downside. The target calculated as a result of price crossing below the 40-day FLD last week was 30.39, which you can see is just over here. It is ever so slightly below the low price on Friday. And so the interesting thing here, if I display the 80-day cycle FLD again, is that price reaching the target as a result of crossing below the 40-day FLD over here did not in fact take price below the 80-day FLD. I've spoken in previous update videos about the idea of a cascade pattern, where when price crosses down below one FLD, it projects a target below the next FLD. That is what is called a cascade pattern. And in this case, the cascade pattern is broken, because price achieving the target of crossing below the 40-day FLD does not in fact take price below the 80-day FLD. And so the time is ripe and the price levels are correct for a 20-week cycle trough to form here. I thought it would be interesting to step back a little bit in today's video and consider a much longer cycle FLD. This is the 18-month cycle FLD, and here we are looking at a monthly chart. Let's take a quick look at the interactions that we have experienced between price and this 18-month cycle FLD in the past 3 years. First of all, price crossed down below the 18-month FLD at this level over here and projected a target of 2,300. Of course, price dropped down below that target by about 120 points in what I often refer to as the pandemic trough. We certainly had a bit of extra volatility around about this period of time in March of 2020 because of the pandemic that was sweeping around the world, and so it was not unusual to see targets exceeded and price stretched a little bit as the market reacted to the news events. Price then, of course, in the next month crossed up above the FLD again, projecting a target of 35.21. Which was, of course, achieved and exceeded a little bit before price returned towards the FLD. It didn't reach it, but that might potentially have been labeled a BC category interaction. Now, the interactions between price and an 18-month cycle FLD are a little complicated, and they are not exactly the same 8 sequence of interactions that we track between other FLDs. The reason for that is because of the 3-to-1 harmonic ratio between the 54-month cycle and the 18-month cycle. I'm not going to dwell on that in this video because it is a fairly complex discussion, but I would like to point out that we do often see a double BC category interaction, and the first BC category interaction, if we have a double BC category interaction, generally occurs at the time that the shorter cycle forms a trough, indicating that this was probably a good time for the 40-week cycle to form a trough in the last few months of 2020. You can see in the analysis the 40-week cycle trough is displaced to the right in about February of 2021, but that's because this very strong and straight upwards bullish movement made it very hard to identify cycle trough positions. The next BC category interaction should occur at the time that the 18-month cycle trough formed in the market. That, according to this analysis, was over here. You can see that price did not come down and find support at the level of the 18-month cycle FLD. All that it managed to do was move down a little bit and then continue moving upwards. But the next very clear interaction between price and the FLD was where price crossed down below the 18-month cycle FLD in the first few months of last year. By crossing down below the 18-month cycle FLD, we generated a target of 35.40. It's just about over there on this chart. Price came down a little bit below that level, not very much, to form the low point in October of last year. We would have labeled that a D category interaction. D category interactions very often accurately achieve their targets. And in the case of an 18-month cycle FLD, that would have occurred at the time of an 18-month cycle trough. So again, that increases the chances that an 18-month cycle trough actually formed in October. You will notice that in my analysis at the foot of the chart, I have the 18-month cycle trough still lying ahead of us. As I mentioned, there is still that possibility. The next interaction between price and the 18-month cycle FLD lies ahead of us. And this is where things get interesting when considering price interactions with the 18-month cycle FLD, because depending upon the magnitude of the trough in March of 2020, we might expect price to cross up above the 18-month cycle FLD, or that 18-month cycle FLD might provide resistance. And so it will be very interesting to watch what happens as price moves up towards this 18-month cycle FLD. Let's take a look at one more FLD. Here we are looking at the 40-week FLD on a monthly chart, and you can see the sequence of interactions. I won't go through all of them in as much detail. That price cross up above the 40-week FLD following the pandemic trough of March of 2020 generated a target of 4,050, roughly over there, which was of course reached and exceeded. Then price crossed down below the 40-week FLD and generated a target to the downside of 40.56, which was of course also reached and exceeded. Price has now climbed back up above the FLD, and you can see it formed a fairly complex crossing above the FLD, generating a target on this monthly chart of 44.38. That's over there. If we view the 40-week cycle FLD on a weekly chart, we generate a slightly different target because of the fact that price crossed above the 40-week FLD over here, and then again over here, providing a complex interaction between price and the FLD. And that target is just a little bit lower at about 43.20. And so in summary, for the SPX or S&P 500, we are expecting a a 20-week cycle trough to form fairly soon, after which price will of course bounce out of the 20-week cycle trough, and we will be looking at the 40-week cycle target as a possible next peak. If price succeeds in crossing down below the 80-day FLD, which I showed you earlier, then we might experience a later and deeper 20-week cycle trough. But time is running out for this 20-week cycle trough, as you can see from this bar count over here, and so we are expecting that trough to occur sooner rather than later. Let's take a very quick look at gold, and there isn't very much to add over what I said in last week's market update. The important thing about gold, of course, is that I believe the peak analysis is more reliable than the trough analysis, and I do believe that there was a 40-week cycle peak that formed over here in the first week of February. We are also expecting a 20-week cycle trough to form in gold, bearing in mind that the troughs are less reliable than the peaks. We have two bar counts that I highlighted in last week's update video. The first bar count is getting very long now, as you can see, at 152 days. The average length of a 20-week cycle, of course, is 136 days. And so at 16 days longer than that, it's not really too long, but it is possible that the important trough, which you can see has been phased at the left-hand edge of this chart as a 54-month cycle trough, it is possible that that trough in fact occurred at the beginning of November as opposed to the end of September, meaning that we would have another 20 days to go. If you take a look at this other bar count over here of 116 days, we would have another 20 days to go to achieve the average length of a 20-week cycle. I am still watching the 20-day cycle FLD, and if we zoom in and take a look at this in a little more detail, you can see that I have two FLDs plotted. That is because the one FLD is based upon the peak analysis and the other FLD is based upon the trough analysis. You must remember that these are two separate analyses. I've discussed this in previous market update videos, and I will be doing a Hurst Cycles Geek video about this exact subject fairly soon. As mentioned last week, following a peak of 40-week magnitude, we would expect price to find resistance at the level of the 20-day FLD at about the time that the 20-day cycle peak forms. So there is the nest of highs. It's a little bit messy for that 20-day cycle peak, and it is quite possible that 20-day cycle peak in fact occurred over there, some distance below the 20-day cycle FLD. What does that mean? It indicates, of course, that there is bearishness in this market, and the reason for that bearishness is because of the magnitude of this peak that formed at the beginning of February. At 40 weeks, that's a fairly high magnitude cycle peak. What are we expecting next in terms of this 20-day cycle FLD? Well, in terms of the peaks, we have a nest of highs for the 40-day cycle peak over here. We would normally expect price to cross above the 20-day cycle FLD on its way to the 40-day cycle peak. But as I've already mentioned in today's video, sometimes price only finds resistance or support at the level of that FLD. But considering the fact that we are expecting a 20-week cycle trough to form fairly soon in gold, I would not be surprised to see price crossing up above this 20-day cycle FLD on its way to the 40-day cycle peak. When it does, we will be able to generate a target for that 40-day cycle peak. Then, of course, price would be expected to drop down again and cross down below the 20-day cycle FLD. But now we're looking fairly far into the future, and so that is something we will be updating as we progress through the next few weeks. The important thing about gold is that we are still expecting a bounce. It might occur in only 20 days' time, but we will be watching these 20-day FLDs to witness price crossing up above that FLD on its way to the 40-day cycle peak. I do hope you found this market update useful and interesting. If you have any questions, please join us on our Hurst Cycles Discord server, or you are very welcome to put them in the comments below this video. I look forward to hearing from you.